This is the You, Me, and BTC podcast.
Cryptocurrency decrypted.
Welcome to episode 72. Last week we spoke about Mike Hearn's article, The Capacity Cliff. In that post, he explained that the Bitcoin network will soon max out, and said that raising the block size limit is our only reasonable solution. He wrote a follow-up a few days later, so this week is part 2 of our discussion. Some people argue that the free market will prevent Bitcoin from reaching maximum capacity. They say that as transactions start to take longer due to volume, the fees will increase and everything will balance out. Unfortunately, Mr. Hearn disagrees. Today, we'll talk about the technical and behavioral forces at work that might disturb that expected balance. And even if we did pull through a period of slow and risky transactions, Bitcoin could suffer from bad PR and might never recover. Stay tuned for all that and tons more. Your hosts are Tim Baker, John Stewart, and myself, Daniel Brown. Here we go.
Alright, hey everybody, welcome back to a new week's podcast from us here at You, Me, and BTC. I'm Tim. Daniel's having me do the introduction again, as apparently I'm not doing it enough or something, I don't know. But, yeah, so we're back recording on a Tuesday night again, even though I don't work this late anymore, but we decided to do it anyway because we love talking at past 10 o'clock. Always.
Bitcoin after dark.
There's some connotations I don't really want to think about.
There's a show that Rachel Mills, well, 2 shows that Rachel Mills started. Liberty After Dark and Politics After Dark. So maybe we could rebrand as Bitcoin After Dark.
Or we have a special section about Bitcoin After Dark.
That you could do it, Tim. That's your section.
I feel the least qualified to do this.
Anyway, well, I guess I'll explain a little bit about where we're headed today. Actually, this is kind of fun. I wasn't really expecting this, but this is turning out to be a little bit of like a mini-series, because last week, Tim and I did an article from Mike Hearn about Bitcoin reaching capacity, and we'll try not to rehash all of that very much, because rehash. I was not actually trying to do that, but...
No pun intended.
I just hate that phrase. I could have said it, but I feel like people misuse it, or
what?
Like
people,
they
yes.
no, they don't. Well, I guess this is misusing it, but they say no pun intended even when they did intend it, and it's like you're an idiot.
You know what's funny? If like you say that when there wasn't a pun.
Yeah, exactly, because there really was no pun intended.
Yeah, you're like just talking about something random, no pun intended, and you say no pun intended.
Oh boy. Anyway, so yeah, well, we will summarize last week's conversation, but we won't go over it all because you can just listen to it, and then
you better listen to it. You better donate because we need money.
Yeah, or you can not listen to it and donate. That's always a possibility. You know what?
Or you could donate twice and listen to it 4 times.
I mean, I realized this before, but I realize now that it's important. I took down our regular tipping addresses, like, because we had one for every post, and it was like a big box at the bottom, and it was kind of annoying. I took that down, but I never added like a generic donate or support button, and I'll fix that. That's
obviously why we haven't gotten any donations.
Sure. All right. Okay. Anyway, so yeah, I'll get an address. Too much
sarcasm, I apologize.
I'll get an address up on the website somewhere, and if you do feel like donating. Anyway, that was a side thing.
I don't care if you feel like it.
We've only done one kind of series thing in the past. Do you guys remember when we did that 2-parter the best Bitcoin services. I think that was like episode
Yeah.
7 and 8.
Yeah, I
Yeah, it
remember
was
that.
right around New Year's.
It probably would fit better as like favorite Bitcoin services, because I'm sure some of them weren't like,
The
you know,
best.
top of the line.
It
And
was the ones we'd used.
yeah, just the ones that we liked and, editor's choice or something. But anyway, I think that's the only two-parter that we've done before, and this is the next one, so we'll see how it goes. So, as quick as you can, Tim, tell us what we talked about last week. Actually, I guess John wasn't here last week. He was on vacation. Were you at the beach, John? We weren't sure.
Yeah.
Okay.
You
Well, now
sounded
it's
very
official.
accusatory right there.
Yeah, I know. The way you asked that was really weird.
Were you at the beach, John? Without
Yeah,
us?
That was kind of weird. Or it sounded like my dentist asking me a question or something.
Have you been eating a lot of candy? It's beach.
Oh, gosh. Anyway, so he was on vacation. So, Tim, this is for John, too. And, John, ask questions if you don't understand.
Thank you for putting more pressure on me. Last week we talked about the big problem coming up in Bitcoin where because more and more transactions are happening as more people get involved with Bitcoin, the block size is being too small, or is not being too small. The block size is going to become too small by some people's estimates by, I think, around next year, or next year, I'm not exactly sure
Yeah,
when.
a year and a half
about a
was
year
his
and
estimate.
Okay, a year and a half. And the problem with that then is the transactions will back up. Some people think that will get fixed by just adding more fees, which actually the article today talks about. But his whole thing is saying that the only reason that the block size is that size is because it was artificially implemented back when... Was it because something couldn't handle a bigger size, Daniel? Do you remember?
It was... Shoot, he said this.
Yeah.
I think it might have been to, like, eliminate spam.
Okay, I remember that in the article, yeah. But for whatever reason, and it was, like, there were plans
it was just,
to take it off, or something like that.
It was just to keep the blockchain from getting too big too fast, I think.
Okay.
Was, just from having people submit tons and tons of transactions, and a ton of data would have to be stored by the whole blockchain, so, yeah.
Okay, but the only limit is an artificial limit, and is that... I don't remember if I asked this in the last episode, but is that only because it's a technology? Does it have a limit in size besides how much storage space we have?
You mean like...
The block size.
Is it like a hardware limitation? Is that what you're asking?
Yeah, is that really the only limitation to a block
Not really.
size?
I mean, maybe the blockchain, like the whole blockchain, that could be limited by like hard drive space. But as for just a single block size... It's pretty artificial. I mean, I guess eventually you couldn't make it like 10 gigabytes because a computer can't keep 10. Well, because it would just be hard to handle by the hardware. But
okay.
We're talking, 1 megabyte now, maybe 20 megabytes in the future. That's not a hardware thing. That's just what the code says. So.
Yeah. What I'm thinking of is what happened. I mean, when you get to where it's to 20 megabytes, you can just raise it again.
Yeah, yep, you could.
Yeah, okay. And again, the only limit is an artificial one. There isn't really any downside, at least that I've heard. Now, I haven't really looked on the other side. I haven't seen anyone's argument from the side that says the market will make everything work with extra fees.
Right, that's true. The downside, the reason it hasn't been done yet, and we talked about this last time, but it's just because of a hard fork. It would require a software change, and everybody would have to change, so...
Yeah, and that kind of brings into question the whole... I remember at the end of the episode we were talking about how us being generally like pro-free market and how that kind of gets a little bit muddied here because it's an artificial limit, but I mean, you do that and I don't think you're really forcing people to do something different because it's not like Bitcoin is... people could still run the other thing, they would just be separated from most of it, wouldn't it?
You mean if there was a fork and people...
Technically, like, it would be useless, but...
Well, yeah, sure. Yeah,
okay.
Technically.
I don't know how to think about that, and I remember being completely confused about it last week and hoping that I would have something thought up, but
well,
I think I actually did spend a little bit of time thinking, I just couldn't it's kind of one of the things I just can't really get at the question to even think about it too well.
No, yeah, I think that, I mean, you covered last week pretty well, and I think you hit the transition just right. You know, at the end of his article, he says people think that the free market and transaction fees will balance everything out, but I don't agree. To be continued. And that's what we said at the end too, as well. We'll talk about this if it's any good. And so that's what we'll do today. I think this is really right up our alley because, I mean, we call ourselves the Bitcoin and Liberty we call ourselves your Bitcoin and Liberty podcast. And the free market is a huge part.
We're just all here for you, folks.
It's true, we are. So yeah, it's a huge part of the Liberty space, and we're going to try and work through this and see what's a free market, what's not, what should the Bitcoin devs do, and yeah, it's a tough question. So, all right, yeah, you talked about force, and I think that's an important part of it, but when you think about it, I think it gets dismissed pretty quickly, because no matter what you do with Bitcoin ever, I don't think you're forcing anybody to use it. I mean, even if you ruin it, that's a good point. That's just it. You're never, I mean, I guess some people, you could force somebody to use it, but that hasn't happened yet, really. And so, yeah, I don't think, I mean, it's tough because if somebody manipulates the software, crashes the entire thing, and your money becomes worthless, yes, I mean, yeah, your money's worthless. Yeah, somebody sort of made that happen to you, but they never forced you to use Bitcoin in the first place, I guess.
And it's not that they just didn't force you. They didn't force you, and there's no guarantee. Like, if you get into an agreement with a private company, like insurance companies, but you sign something that says, I mean, insurance company is a terrible example for that, actually. It's like the exact opposite. Most companies, if they don't hold up their end of the deal, or if something goes down,
there's no guarantee. That's it. That's all it is.
There's no guarantee with Bitcoin. Bitcoin, you don't have all the safety things in the lines that are supposedly keeping your money safe in the normal banking system.
Right. Yeah, no, so basically with his whole explanation for why the free market would not work has nothing to do with economics. It's really, well, I mean, there's a little bit of like psychology, like what would a user do if their transaction wasn't going through.
It's very simple psychology.
Yeah, there's a little bit of, behavior stuff, but in general,
someone's money and they don't like it.
Yeah, in general, it's like a software analysis, and he's explaining what the software would do and why it would cause problems as the transactions started piling up. So I guess we'll get into that then, and he has two specific scenarios, and I guess we can just describe each one. The first one is what happens if we change absolutely nothing. What happens if we keep the exact same wallet that we have now? There's no optimizations, and he's not even, when he says no optimizations, he's not talking about upping the block limit. He's saying there are some other optimizations that people might try, and he'll describe that later and say why those wouldn't even work. So the only optimization that would work is raising the block limit. But we'll start with no optimizations. And again, it's kind of technical stuff. He talks about the memory pool and the network messages and nodes. I'll see how this goes. I'll try to avoid the really technical stuff and just basically and just make it top level if I can. If there's no optimizations, the biggest issue will be the memory pool of the nodes. And that's basically their collection of transactions that have not yet been confirmed. When I make a transaction, I push it out to everybody that I know on the network, to Tim and to John and to whoever else. And they keep that data in memory, and it's exactly the kind of memory that we always talk about on a computer. Just like, you can say, my computer has 4 gigabytes of RAM or 8 megabytes of RAM or memory. That's what it is. That's what they do. They put it in that memory. And if you only have 4 or 8 gigabytes of memory, there's a limited number of transactions that you can fit in there, obviously. And I guess that's basically what he's explaining, is that it's not designed. The software is not yet designed to handle maxed out memory. It's, in a lot of cases, it could just crash if it fills up, or it's going to go super slow, or the operating system is going to see that something's going wrong and it's going to kill it. So not only is it going to go down, but they're also not optimized to restart. So that's it. I mean, that's the main problem in terms of transaction buildup, is that the nodes are going to get full and they're going to go down. The messages are going to be transmitted slower. A lot of things like that. I'm not doing so well staying out of the technical stuff, but I guess if that's what he talks about, that's what we'll talk about. Okay, so there's a couple things here, and he gives some numbers about these issues and how long they could mess with transactions. And well, actually, the first numbers he gives is that if we were 80% full, I don't know exactly what that is 80% of. Is it? Yeah, I guess it would be 80% of the block limit or just transaction volume. If we're 80% full, then half of all transactions will take 20 minutes to confirm. That's a pretty rough thing, because, I mean, even the 10-minute time is annoying sometimes. 20 minutes is going to, be a pretty big bother. At 100% full, half of the transactions should take 6 hours, more than 6 hours. That's pretty crazy. I mean,
that was by the scenario too, right?
Yeah, that's exactly right. That's what I was going to get to. That was like a scenario that somebody ran kind of unrelated to this, and he's saying that because of these memory issues, it's actually going to be worse than that. So it is a big deal. It's not like you're going to, I mean, 20 minutes we could live with, but it's going to be 6 hours, or it could be. And so that's a huge deal. And okay, so this is where he gets into the more behavioral kind of free market stuff, because all that data, all those issues, none of it addresses the fact that, well, hey, why don't people just start paying more for their transactions to get priority? And the reason that he says that would still become a problem, I mean, there's several reasons. One of the ones that seems the biggest to me is because people are going to keep resubmitting transactions. It's going to be this awkward, unbalanced race to the top. If they're waiting...
Yeah, that was a good point. Yeah. It was just like everyone was going to kind of little by little up the money up the fee they were paying, but because they were doing it so slow, no one was really going to get it or something like that, so they were just going to kind of just be wasting money until maybe someone paid way more, but not many people are going to want to do that because they don't want to waste their money.
Yeah, that's exactly right. And that's a big deal, because I know that's exactly what I would do.
So are they saying that no one's would go through? Why wouldn't still the person who made the highest fee?
Sure, yes. As long as the node doesn't crash, I mean, sure, eventually you're going to find a block and somebody's transactions are going to get through. So it is true that raising your fee would get you priority. The problem is that, yeah, like I said, that's exactly what I would do. I would not, if I was paying a penny, right now the fee is a couple pennies. And if I were trying to get priority, because I'm a frickin' cheapskate that we talk about all the time, I'm not going to jump straight to $1 fee. I'm going to go to 10 cents and then maybe 15 cents. And that's just going to cause...
It's going to go right for 50.
50? Why 50?
50 cents. Because no one's going to go as high. I mean, not as many people are going to go as high.
I'm not following.
I guess what I'm saying is... I was just saying, like, if something like that does happen, it's just easier to spend a little bit of money.
Yeah, but I'm not going to spend 50 cents for a transaction. Like I said, I'm going to spend 10 or 15 cents.
Just completely as an aside, what would be the highest that you'd be willing to spend for like a transaction you needed to go through? Like it needed to go through.
I mean,
quickly.
It depends why. If I need it to go through because I'm about to make $60 on a trade, then I'll spend $5 on a transaction.
Yeah, I guess it is completely subjective. Yeah. Sorry. That was a fucking terrible question.
There's no such thing as a bad question, Tim.
Yes, there are. There's so many bad questions.
You know what? You're right. All right. Yeah, so the issue is that people are just going to keep resubmitting transactions with a little bit higher fee and then a little bit higher fee and just trying to get it pushed through as cheaply as possible. And that's just more overhead. That's more transactions going back and forth. More people are trying to deal with their memory pool, trying to get rid of, second transactions. Yeah, all kinds of stuff. And I guess one important thing for that whole idea of any delayed transactions, no matter if it's because of the memory pool or because of competing fees or whatever, one huge issue would be double spending, and that's what he brings up. If you have to wait 20 minutes or a couple hours for your transactions to get confirmed, that could be a huge issue because this to some extent, even with the 10-minute time, this could already happen a little bit, but we just kind of shrug it off. But it's going to be exacerbated a whole lot with these bigger times, because if I go to Tim, what are you selling me?
Pumpkins.
Okay. If I go to Tim and I want to buy the world record biggest pumpkin ever, and I give him $500 for that pumpkin.
Oh no.
And so we're sitting there waiting for the transaction to go through. I mean, maybe he wants to be sure it's $500, so he'll wait 20 minutes. But it doesn't get confirmed. Well, that sucks. Let's wait 40 minutes. Still not confirmed. We up the fee a couple times and we wait an hour. All right, fine. Just take the frickin' pumpkin. You're here. I know who you are. You're going to... Well, I guess if you did know who I was, it would be a lot harder for me to respend it without fearing you coming and shooting my kneecaps off for the pumpkin. But in other situations, they wait a while. They give you the pumpkin. I go home. And I say, wait a sec, that transaction's not confirmed yet. I'm going to send another transaction with those exact same coins to myself. And I'll include a $10 fee. And the miners see that $10 fee, they put it right on top. And the money, instead of accepting the original transaction where the money goes to you, they see the bigger, they see the $10 transaction. They send the money right back to myself because it's more valuable, and they're going to confirm it right away. And I just got the world record pumpkin for $10, and Tim lost the world record pumpkin for nothing. He doesn't get any of that. So that's the double spending issue with longer transaction times. And then I really like this next part. He starts talking about just a really general way of how that would affect Bitcoin as a whole. As soon as stuff like that starts to happen, well, yeah, do you want to tell the Google story, Tim, about his analogy with his experience at Google?
Well, he just says that
we mentioned this briefly last week, that he used to work as a capacity planner or something for Google, and he faced these same kind of issues. Go ahead, Tim.
Well, he said he was talking to, I think, one of his superiors, and he said, well, what's the worst that happens? We're down for maybe 3, 4, 7, maybe even a day. I think he said maybe even a day, which even I was like, yeah, that's pretty bad. Yeah, and he was thinking like it wasn't as bad at first, but then he got looked at by his superior, like that would end up on CNN, like the front page of all the websites would be saying Google's been down. Like, we don't do that because Google's known for being up. And he said that kind of just reminded him, and that tells him now, like, if you have an economy get backed up, people are going to be angry, and people expect a certain level of competence from a payment system. And if you have something like that where the fix is something artificial and it's just changing some code, no matter really what your views and morals are as far as messing with the free market or stuff like that, it's going to look very bad for Bitcoin if you're concerned with promoting Bitcoin as a tool for the common person to use. So
yeah, I definitely agree that it would be a huge, it's PR, right? That's what they call it, just bad for PR, right? Public relations, if all this stuff just started failing and going crazy.
Oh, yeah, because then people would be like, well, see,
Yeah.
it doesn't work. And actually, it wouldn't. I mean, yeah, technically it doesn't work, but that's just because you didn't change it.
Right. And with the Google thing, actually, I mean, he was talking specifically about Google Earth because that's the department he worked in. But I remember fairly recently, maybe a couple months ago, I literally remember it was in the news. Google went down for 5 minutes, and it was in the news. It's, I Googled it here, and there's the top, 8 or 10 results are about Google going down. Oh, there's one for 2 minutes, and it killed 40% of the world's net traffic. But that's the thing is, I mean, that's with Google, and it's a little bit different, but one tiny little slip up, if it gets in the news, that's what he said. That's what Mike Hearn said in the article. He's like, or his superior said, like, okay, I'll try and play it out a little better. He's like, oh, well, if something goes down, it'll be a day, worst case, and we'll get things back together. And then his superior says, well, yeah, but then that'll be on CNN. Well, yeah, it's a huge deal. And
he wasn't understanding the magnitude of how much that's going to just fuck with people and how much that's going to shake people's faith, because anything like this, especially with like Bitcoin, because it's so already, I mean, it's getting better, but it's already kind of seen, it's an internet thing, not people might understand it, so something bad like that happens, it could kill it. Actually, I do like the point that he makes that it wouldn't necessarily kill it, but it would take it out of the momentum now. Some people would stay on, and eventually, as users got just left, the backlog of all the transactions that had piled up, that had caused everything to start slowing down, would eventually get removed, and it would start working again, but it would not, the businesses that all run around it, this podcast, everything would suffer.
Right.
And all the businesses would have to turn to something else, or they'd just completely go out.
Yeah, I think it would tread a really delicate line. I mean, it is a really delicate line between flopping, but, surviving, but definitely being done, done from the mainstream. We'll replace it with something better.
Yeah, they make the MySpace of cryptocurrencies.
Yeah. Because, MySpace still exists in some form, I think. I actually thought the other day, and I'll probably do this, I want to send out a tweet like, oh, guys, check this out. I found this cool website. They let you build your own website and stuff. I think it's going to be the next big thing. It's called myspace.com. But anyway, yeah, so that could happen. It really could. I mean, we say regularly that Bitcoin is never going to disappear, just because that's pretty unlikely. You could run it with 2 people if you really wanted to. And so, yeah, theoretically, it's never really going to go away. But still, it could flop. It could just be a lot less useful and replaced by something better. And yeah, that's something that he says could happen. So that's why we have to be careful.
Yeah.
Hey guys, I want to tell you about Wall of Coins, a brand new and very handy service for trading Bitcoin. The platform is designed to enable anyone to get their hands on some Bitcoin. Buyers are quickly connected to an authorized, trusted seller within the Wall of Coins network. Just set a dollar amount for your order, safely pay at a bank near you, and you instantly own more Bitcoin. Buyers don't even have to create an account, so anyone can have access to Bitcoin. Got some extra coin lying around? With Wall of Coins, you can sell it for cash, available immediately in your bank account. Visit wallofcoins.com right now to see just how easy it is. Yeah, that's what would happen if we pretty much just left the code exactly like it is.
That's what he says would happen.
Well, yeah, it's a theory, and
Makes sense.
yeah, relatively, yeah. But he says, let's rerun the scenario with upgraded code. And that's like we said, let's say the nodes were able to detect when they were full, when their memory was full. Let's say they could automatically restart themselves. Let's say they could even notify the person who sent the transactions. Let's say they could even send them a message and say, hey, we don't have room for that. We're going to reject your transaction for now. Okay, that's pretty cool. We have some updates there. But, the memory pool is still going to get full, and we're still going to have some issues. I guess one of the main issues there is that, and he says, you're going to get that reject message, and this is a quote, the user is shown an error message and the coins do not move. The user is understandably rather upset that his money seems to be stuck in his wallet and he cannot even sell it for a working currency. So I'm not sure that that's really that much different than the previous scenario, but it is interesting that he's shown an error message. So if you don't see the error message, you might let it slide. You might say, it'll go through eventually, even if it takes hours, and someday it'll get to my exchange and I can just dump it and get my dollars. But in this situation, it's kind of funny. You see the message and you get upset because your money's it's just stuck in your wallet. You can't do anything with it. And another issue that he talks about is everybody's memory pool is a different size. So some of them are going to be full and some of them might be half full. Well, then when I broadcast my transaction to everybody, John's going to say, yeah, sure, I'll take that transaction. And Tim's going to say, yeah, I'm full. I'm going to reject that. And then, so it's like sort of being relayed, but not really. And then that has huge issues with propagation, because if John is the only one holding my transaction, then that's one less if I was sending it to Tim and John, then that's one less person who is able to not just hold the transaction, but propagate it. So it's possible that I could make a transaction and only, half the nodes out there are going to actually keep track of it. And then whoever I'm sending money to, if I'm trying to buy that pumpkin, he's not even going to see the unverified transaction. It's not like he's going to say, oh, yeah, I see the transaction, it's just not confirmed yet. No, he's not even going to see the unverified transaction because only half of the network even has it, and maybe he's not connected to that half.
Yeah.
So that, I guess the root of that problem is just because everybody's memory pool is a different size. And then he also finishes this one with, the user will be understandably rather upset that the money seems to be stuck in his wallet and he cannot even sell it for a working currency. And yeah,
sounds right. Yeah.
He gives one more about upping your fee, and the same thing happens. It gets bumped again. He has this interesting, I don't know if this is a real word, but he says as they up their fee, eventually they may notice and try to bump the fee again. But once more, they have no guarantee that they won't be gazumped a second time, or a third, or a fourth. I have no clue what gazump... Well, from context, it's pretty clear. It's screwed over, but apparently you can get gazumped with transaction fees. And again, your money's going to be stuck, and you can't even sell it for a working currency. So yeah, I honestly, I'm not seeing a huge difference between upgraded code and non-upgraded code, but I guess that's his point, though, right? Like,
yeah.
it's
either way, you're fucked.
Yeah, and again, when we say upgraded code in this scenario, we're not talking about upping the block size, because he says that is the solution. But if we try to upgrade the code without upgrading the block size, then we're going to have the same problems whether we do those upgrades or not.
So what, I don't understand why he brings all this up.
Because there are some people, I guess he says there's some people trying to say that this would work.
Yeah, there are people who say that because of the free market and because of because I can just increase my fee if I need a faster transaction, then everything will be fine. And I guess at face value, that's true, but his analysis of what people are going to do if they're trying to slowly upgrade their transaction fees, and even without the fee competition, even if everybody was paying pretty high fees, you're still eventually just going to have a volume problem. No matter what the fees are, there are going to be a certain number of transactions that need to go through, and only part of them are going to fit. So I guess that's the core of it. It's like, no matter what the fees are, the volume is still going to be X, and X is going to be bigger than the block size. Does that seem like a valid point? Does that?
Yeah, it doesn't really help.
Yeah, I mean, that makes sense. I guess just like, I don't know, I feel like the first thing I would think is like, well, why don't we just make the block size bigger? Like,
Yeah, and that really is his argument, and
I mean, I guess he could have just like said that and not like explained all that. That's what I meant by like, why does he bring it up?
Yeah,
I think he kind of did that in the first one, didn't he? Or else, I mean, he might be trying to get like a series out of this. Who knows? He's probably, I mean, although he's not really a writer.
You did another one of the same person?
Yeah.
Okay, I didn't realize that. That might make more sense then.
He's a Bitcoin developer too.
Yeah,
so
he's done a lot of work.
He's like directly involved.
Right. Yeah, maybe we should have...
Probably should have said that too.
Yeah,
we said
that
it
more
last time, I think.
But it's a two-parter, so we can miss the important stuff. But I will say, last time we waited till the very end, and now we'll wait till almost the end. This is from medium.com, and I'll have a link in the show notes. I did forget that last time, but before we do finish, though, I do want to talk a little bit more about what is or is not a free... Well, here's how I'll preface this. His analysis is reasonable, and I think it probably would cause problems in general, but honestly, in my opinion, I think I have a little bit more faith in the free market than he does. I think the problems wouldn't be quite that bad, and I think that once the problems did arise, people would be solving them probably a lot faster than he thinks. Now, I'm not an economist and I'm not a developer, so maybe I have zero place to speak here because he is a developer, and I mean he's not really an economist maybe, but maybe I have hardly any room to speak here. But it just seems like, I don't know. I just think people are smarter than that. You know, if they're having problems
I agree with you.
Yeah.
I mean, his points about like Bitcoin losing face are definitely like true though. Like, I feel like people would definitely figure something out that works, but it could still be too late.
Yeah, I guess the reason
for mainstream adoption.
Yeah, no, that would definitely be an issue. I think the reason I'm having trouble defending myself is because it's the same thing, because even if there is a free market for fees, the volume is still going to be there. Even if people are spending $10 a transaction to get theirs through, there's still going to be 10,000 people out there with zero fee transactions, and they're going to be pushing those to the network nonstop. So yes, here's what it is. The free market will allow you to get your transaction through if you pay more. That will happen. That's fine. That's the free market. That'll work. But it will not stop the volume. And I sort of already said this, but it's kind of clicking more now. It will not stop the volume. There's going to be people submitting tons and tons of transactions that might never get confirmed, but they're still in the memory pool, and therefore they're still contributing to crashing nodes, to splitting up the network, they're contributing to downtime, and therefore they're contributing to very, very bad PR. So, I don't know. I think I actually am starting to agree with him a whole lot more now.
Well, I don't think that, I mean, it's still like the free market, because I think I was trying to say this before, was Bitcoin's kind of like I mean, it's a product. It's not, I mean, just like, I guess technically any form of exchange is a product in that sense. So, like, just messing with the currency exchange to make it easier to exchange isn't inherently bad, I guess I would say. Like, it can be bad, obviously. Like, if you turn Bitcoin into a PayPal thing so that it was more easily adoptable, I would at least say that that's bad. Or how basically most money is turned into paper. You can have some people who argue that's bad because you're not owning a value. But just, especially, I mean, this is probably me, no, I mean, this is me trying to just defend it from a free market perspective, but because it's like, it's not like what we were saying before, like you're not forced to join it, I guess. It's like a club, but then, no,
So-
yeah, it's like a club and you're just making it, the capacity larger.
Yeah, I actually could see that, where...
But, I mean, you are possibly excluding some people, but only if they want to stay in this. I don't really see any benefit from staying in that. Like, I don't see any
Right. Tell me if this is
bad thing.
Tell me if this is what you're saying. When people start to encounter those problems, eventually they're just going to give up and they're going to back out of Bitcoin. Maybe they're able to get a transaction through to an exchange and get their dollars back, maybe not. But they're going to back out of Bitcoin and then the volume will decrease to balance out. And so eventually, yeah, we'll have those problems, but it's not going to eliminate Bitcoin. It's just going to force it to stay a smaller size. It's going to force the user base to stay smaller.
Well, that's not really what I was saying now. I said that before. What I'm
Okay.
talking about now is if this isn't...
You said it would be like a club with a limited capacity.
No, I know, but I was talking about something else before that. I'm more talking like how I don't really think it's necessarily not a free market thing. I don't think
Well,
I
yeah.
don't see it like that.
Oh, yeah. I don't think he's trying to say that it's not a free market. I think he's just saying that in this situation, the free
think
market wouldn't get us very far.
No, but I still think this is still...
Well, I don't know. Like, it being the free market doesn't preclude just making the block size bigger. Is preclude the right word?
I'm not sure.
Yeah,
but I think
that is the
that's
right
what
word.
Okay, that's what I'm saying, I think,
By
John.
like,
Just because
I
it's
don't-
the free market doesn't mean you can't increase the block size.
yeah, I know.
Oh,
That's like,
okay.
That's
like,
what I was saying, Daniel.
if-
It's just
if-
making a bigger club so you could, because that's the whole thing, is there's more people, more transactions. You just
Yeah,
make it bigger, so why wouldn't people go to the bigger one?
Oh, yeah.
yeah, and it's in people's interest to make it bigger too. That's
Oh,
still just
yeah.
people acting
that's
in
what I was saying.
self-interest.
Was why, like, there's a hard fork, why would you not go to the new one? It's not like it's less secure necessarily.
Yeah,
or
okay.
anything like
That is a good point, and you're right. If you make the capacity bigger, there's still only going to be 21 million Bitcoins, so they become more valuable theoretically. So that's pretty cool. But yeah, but I do like your point about, you know, why wouldn't you do it? And I guess that's good evidence, or not evidence, but good reason to believe that, okay, it probably will happen. And I guess that's a good thing then. Within the next year, his message is there. It seems pretty clear, and it seems like it's in everybody's interest to just say, yeah, let's go ahead and up the block size. And so, yeah, maybe it's reasonable to expect that it will happen. And, you know, after reading this stuff, I think I would want that to happen. And, yeah, we'll see how it goes. Maybe it will.
Yeah, I mean, I'd need to look into it more, but I just haven't seen any kind of reason not to. Like, just why?
Yeah,
Why not?
and going back to what you said earlier, Daniel, I think that people are smart enough to figure that out.
Right.
And like,
Yeah, no
Well,
one's gonna be like,
if-
no, I don't want it bigger. Well, why? Well, I don't.
well, we can mention this. We were talking before we started recording about how Gangnam Style like had so many views that it
yeah.
actually forced Google to update a bunch of code because it wasn't written to handle that volume of numbers or that
Right.
high of numbers. But like, I was talking to a friend of mine about that, or he was explaining it to me, like all the stuff that happened, and he was like, well, they probably realized, maybe even when they wrote the code originally, that they eventually might have to change that. They
Right.
just kind of like let it sit for a while. And I think stuff like that happens all the time, especially with like software and things like that, where you can kind of just change things at any point.
Yeah, and I think he was even saying in the last article that Satoshi basically had planned on that. He basically said, yeah, we'll raise this eventually. And you're right, John, that kind of stuff has to happen all the time. And yeah, so let's do it then. If that's what the plan has been since the beginning, let's make it happen. But this is a little different because we've basically agreed that we should do this. But I did just have an idea a couple minutes ago. I don't know, it's just an interesting idea, and we'll see what you guys think. What if, basically, if the memory pool is getting filled up, that's a limited resource, is having space in somebody else's memory pool. So according to the free market, then the price of getting in the memory pool should just go up. And what if that's what happened? What if the nodes started charging, not the miners necessarily, I mean the miners are nodes, but what if they started charging you not just to confirm a transaction, but to actually submit a transaction in the first place? Now, I'm sure that has all kinds of implications, and that would take a whole lot of maybe overhead, just some sort of network communication. Well, how much do I pay you? Do you pay another miner if you continue to broadcast that? So we won't get into all that right now. I'm sure there are all kinds of implications, but it's just a crazy idea I had. If it's a limited resource to get into somebody's memory pool, then theoretically you should start paying for that, right? Any reason that wouldn't make sense?
That seems to make sense.
Yeah, I mean,
And maybe that would happen.
Yeah, I mean, I think if the 1 megabyte limit was not artificial, if it really was like a hardware limit, then that could be a reasonable way to go. Is just, all right, well then, and that would protect from spam too. I mean, if you have to pay just to broadcast a transaction, then I'm not gonna do it over and over and over. So
yeah.
there are some spam transactions that have been hitting my wallet for, well, actually, it must be over a year now. They're 1 Satoshi transactions, and they show up for, a day or two, but I think they expire after a certain amount of time, and then eventually they get broadcast again, just randomly throughout the network, and they show up in my wallet again, but they never get confirmed. And
How does that work? Like, what's happening there?
Well, my wallet sees the transaction, but after a day or two, if it's not confirmed, it's like, all right, this isn't going through. We're going to dump it again. But
So why isn't it being confirmed?
Oh, it's 1 Satoshi. It has no fee. I mean, or actually, you know why? It's because that 1 Satoshi is below the minimum. There's already a minimum transaction size of like 5,000 Satoshis.
Okay.
So none of the miners will confirm it. And if they did, then the other miners would not accept that block. So
yeah, okay.
But then once my wallet rejects it, somebody out there is still holding on to it, and then they send it to a node, and then they send it to a node, and then it gets to my wallet again. So, and the reason I know that I remembered that it's a little over a year ago that they started showing up is because the address that came from, it starts with a 1, like all Bitcoin addresses, and then it says Sochi, S-O-C-H-I, for the Olympics. And one of the other ones also said 1 and Joy. So my theory was that it's Coke and the Olympics were doing advertising with Bitcoin spam. And I don't know, maybe that's true. Anyway, all right, that was pretty solid. Anything we should hit before we close?
Tell us what you think. Do you have you heard any other explanations as to how?
Oh yeah, definitely. If you
please, anyone email or tweet us with a link about someone else explaining why they think that it would work this other way.
Exactly.
Like
a defense of the free market in this situation. If somebody is arguing that we shouldn't,
or what he's calling the free market.
Yeah, we won't go into that, but sure.
He called it a fee market, not a free market.
Well, Yeah, he did do that, but I think he meant both. I think he said the free market near the beginning.
Well, I disagree with him.
We already did. We already shut him down, John. His argument was flawed.
We
Anyway.
got him.
Good for us.
Anyway, if somebody is supporting the 1 megabyte limit, let us know. Tweet us at
Supporting.
I support a smaller Bitcoin. Well, I guess you could, like, if you just really didn't want other people to get involved.
I actually prefer a 10 kilobyte limit.
This episode is never going to end. Tweet us at YMB or leave a comment. And yes, I will get the donation address on the website. So if you're interested, we can use all the support we can get. Thanks for listening, and we'll see you next Thursday. I don't usually say that in here. I normally put it in like the post-recording, but I'll say it here.
Oh, wow.
We'll see you next Thursday.
making changes. Innovating.
Thanks for listening to episode 72. All of the music in today's show was from Jon Stewart. Remember to check out this week's show notes at youmeandbtc.com and leave us a comment. We'll see you next Thursday.